Hey guys, what's going on? It's good to be back. We've predicted accurately a lot of things in the market. Sorry I haven't been able to post a lot of videos. I'm officially a grandfather of twins. Yes, so my life has changed quite a bit in the last couple of weeks. And kids are awesome. God, I have kids in so many countries. God help me. Okay, so 5 things to master to beat the market. That's the conversation for today, guys. And so there's many things on the list: emotion charts, 13 market move sequences, divergences, historic analogs, earnings reactions, and so on. But the most important one of all of these things is emotions. So even though some of you may be turning in today to try to figure out, well, is the market going to go up or down tomorrow, which I will give you that information by the end of this video. But I want you guys to take your trading skills to the next level. And the only way, okay, even if you study absolutely everything here, okay, what you're going to need the most help with is this right here. Because if you understand how everything works, if you understand the charts, okay, there's still a major part of trading is being able to take certain actions. So emotions is the most important part of trading, guys. And you gotta understand how to do certain things, but your emotions at certain times will cause you to mess up a perfect trade. So if you've done that, congratulations, put a check mark right here. You can actually conquer that. You can change that now. If you can't find time, a few hours over the weekend to learn the charts divergences course that we offer, that's a problem, because, hey, nothing can help you. Nothing can help you. The charts have to be a part of your regular trading regime. The focusing on charts, even though it's the second part on the list, you know, you should be doing that. Any successful trader I know, you know, they look at a bunch of charts each and every day to try to, you know, point out to some developments between the correlations, between the historic analogs. There's no way you can nail some huge trades without understanding that. But when you do understand the charts, and when you do identify these divergences and historic correlations, it's just a part of you being a successful trader. So, but that is important. Without it, you can't go further. So if you don't understand that, you need to start there. Once you understand that, you got to focus on your emotions, okay? Because a lot of times you'll have a perfect trade figured out and you're going to miss it. You're going to miss it because your emotions will cause you to jump out of the good trade. Your emotions will cause you to miss out on a perfect trade. And normally, it's quite simple. A trader that has taken some bad trades on a particular ticker symbol or commodity, right? We had some incredibly successful trades over the years on gold, trading options on futures on gold. Recently, you know, despite of every historic correlation pointing to a move higher in gold, that trade has been a bummer, okay? But, you know, considering how much money was made on that trade in relation to how much money was lost on this trade recently, I mean, the proportions are still substantially to the green side for our traders. So when you look at all things weighed out and put together, I mean, these are huge market opportunities where, you know, some things that normally will correspond together, they're not jiving. Normally after that, you have a huge opportunity when things that just start rolling like crazy. So oftentimes a trader will look at some trades and they are not going to make a lot of sense of that. If you're a new trader, if you're looking at stuff and, you know, you keep taking some trades and they're just not working out, it does not mean that you are not going to be a great trader. All that means is sometimes you have to have a little perseverance, but you got to be having the means to calculate, well, how off you were on your trades. And oftentimes, most of the traders are unable to do that if they're not focusing on a lot of things. But for the point of this video, guys, so you've got to get the technical part of trading before you can really focus on the emotion part of trading. And otherwise, you're going to be messing up some of the simplest trades that could be putting a lot of money in your trading account, and you're going to miss them. You're going to miss them because, wow, I took this trade yesterday and today I'm not taking it. Leo, I'm not trading gold at all. Leo, I'm never taking a GME trade ever in my life again. I mean, there's stuff like that when I hear stuff like that from traders, it tells me that they're not 100% ready. They're not 100% ready to take a 50K account to a few $1 million. You cannot have this emotional attachment to your losses or to your gains. It works both ways. Somebody says, well, Leo, I've been really successful shorting this recently, and therefore I'm going to short it again. Well, I mean, the last video I've posted on this channel was talking about how it's time to get bullish. Okay, when everybody's just so bearish, there are times in the market when everybody's just so bearish. Every headline you hear is just so negative, and yet the market doesn't drop. It tells you that despite of how negative the headlines are in the market, they're buying the market. And as soon as the market is going to get any sort of positivity, we can get a really nice rally, which we've had over the last 2 weeks. I've not had an opportunity to post a lot of videos on all the alerts we have taken, but we've been predominantly bullish with the exception of a couple of days, and those trades have been phenomenal. But we did mess up a couple of trades, such as taking another shot at GME. GME is going to be one of the greatest trades this year or the first couple of months of next year. There's going to be millions and millions of dollars made on shorting GME, and we're very close. And understanding that you could be so close at times and still miss a trade, that's very important to your emotions as a trader. It's very important to understand that you could miss out, especially when you're trading weekly options, on a perfect trade. You can miss out on the perfect trade literally sometimes by 10, 15 minutes. Your emotions will cause you to win or they will cause you to lose. But as a trader, your emotions will greatly vary also based upon what you have going on personally in your life. Sometimes that will impact your trading. It will impact you depending on where you are in life, on your journey. So all of these factors, they have to be put aside when you're trading. You have to focus on charts. You have to focus on your emotions. And there's just such a thin line between the charts and the emotions that even if you're extremely good, there are times where you're going to make mistakes no matter what you do. So understand that, but understand you can make a little bit of money successfully here and there. Once the market changes, all of a sudden you're going to have losses. When the correlations break, you're going to have losses. And most of the time, you have to be able to read your emotions in order to be able to respond to what the market is doing correctly. And let me rephrase that. You have to be able to read your emotions of how you respond to the market in most instances in order for you to decipher what the market is going to do next. So if you're a bear and the market's been dropping for a while, you're probably sitting there thinking, well, geez, all I got to do is just keep shorting the market. And all of a sudden the rally comes and wipes out your gains. So oftentimes, if you're successful at a certain strategy, understand this, the market will change. It's not going to work in your favor all the times. And sometimes it's during those transition times where traders that, let's say it's been on the roll for a bunch of months now, they're like, oh man, I don't know. Every time I try to short something, it doesn't work. Well, right there, you know that the market has shifted because some of the things that you were doing before, they're no longer working out for you. So it doesn't mean they're not going to work again. It just means that you should be paying attention closely to some of the things that are developing in the markets that are just not so obvious to an average or typical trader that still pays attention to the headlines and the news. So as bearish as the news are, I think we're definitely heading higher short term. And I think the cryptos heading higher short term, despite of how bearish the sentiment is, the crazy stuff, the bankruptcies and the collapses and a lot of crypto. I think we're about to see a huge reversal in that. So this is not the time to be bearish in crypto. Like, understand, people tend to overreact. I'm going to just give you a quick example. So people tend to overreact when? Well, oh boy, well, Bitcoin is here at 69K. Well, 69K, we told you to short Bitcoin, right? And so the overwhelming majority of people, they were bullish here. Well, it's easy to be bullish when something just keeps going higher. When something has the solid uptrend, just keeps going higher and higher, higher. It's easy to be bullish here. Every idiot in the world could be bullish here. Oh, it's at 69K. The next day, we're going to 100. Like, you can't be a real trader and just look at this and make money on this. I mean, you can't make money when stuff is at 69K, okay, when it's up 50 to 100% from early in the year, right? This is not the time to be bullish, but that's how the human psychology works. They tend to overreact. Wow, oh my God, look at this beautiful move higher. Well, sure enough, it's going to move higher. Come on. A 5-year-old can understand that things have been bullish, but this doesn't mean that they're going to continue to be bullish. So now watch this. The downtrend has actually started, but it's just not quite apparent because the downtrend by itself at 69K, wow, it drops, it bounces, it drops, and bounces. See, nothing goes just straight. I mean, there are instances where biotechnology companies, their announced earnings or a failure of a drug to move to the next stage of FDA approval, and they do straight this. In reality, the market doesn't move straight down or straight up, right? It's up, down, up, down, up, down. It makes some kind of uptrend or downtrend. And for a typical trader that is considering himself a day trader, right? They're like, well, oh my God, things are dropping today. So they're buying puts before they know the market reverses. So even though the market is overall in a downtrend, they get caught up at the wrong moment. So going back with the analogy here on Bitcoin, right? Well, it's not apparent that it's transitioning from a major uptrend to a major downtrend. So now, fast forward this, okay, now we're at 18, 19K on Bitcoin. And people are like, oh my God, yeah, well, shit, now it's going to go to 10, okay? So they're basically, the people that were saying at 69 that it was going to go to 100, the same people now like, oh my God, it's at 18, now it's going to go to 10. Oh my God, it's going to go to 0, okay? Like all that bullshit. Please, just understand this. This is the time to buy it. It's not the time to short it. It's the time to buy the hell out of it, okay? And, I mean, if you're a long-term investor, it doesn't even really matter. Just buy it and hold it forever, okay? You can do with a lot of things. You buy a good business, you hold it forever. You buy gold, you hold it forever. Chances are, adjusted for inflation, it's still going to outperform pretty much every other currency you can hold out there, okay? But the point is, as humans, the main point of this illustration, we tend to overreact. When things look super bullish, it's easy to be bullish. When things look super bearish, right, knowing the history of Bitcoin, right, when it drops, what does it normally do? It bounces quite fast. So this time we go lower, 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 and man, we're between 18 and 20K. It seems like forever without any major bounce. So people are like, well, I don't know if that shit ever going higher again. Of course it's going to go higher, okay? Just understand the markets. Just understand your psychology if you want to succeed in this, right? When Bitcoin is at 69K, it's easy to be a bull. When Bitcoin is at 18, it's not so easy to be a bull, but this is where you got to be a bull. It doesn't mean it's going to make you money tomorrow on the bull side, but what I'm saying is people as human beings tend to overreact to what's actually happening. Now, they also do that in relationships. So maybe as a major point of this video, since we're trying to study emotions, look back. If you're a guy, you've been involved in a relationship with a girl, maybe your girlfriend, your wife, your fiance, and you knew somewhere down in your heart that the girl was not good for you. Basically, you noticed some characteristics that you knew were not good but you ignore them. Maybe because you chose to focus on some other good characteristics in her. Maybe she was just really pretty, but her personality it was rubbing you the wrong way. But you're like, damn, she's so hot. I'm going to stick with her anyway. I'm going to give it another try. Or maybe it's the other way around. Or maybe it was just something, Maybe it's not even a perfect example. But my point here is there are times where you're going to do stupid things even though you know that it's probably the wrong thing to do, okay? Just like it's easy to get excited here, okay, at Bitcoin 69, and it's easy to get disappointed, but when it begins to drop here, you're like, no, I'm not breaking up. I'm not breaking up with her. Oh, hell no. I'm not doing it. My God. Whew. Yeah, she's so pretty. We have this mental connection going on. Or, my God, the sex is like the best I've ever had in my life. Whatever it is, right? The point is, like, after having this huge, exciting relationship here for most people would have been from 10K to 69K, right? Clearly not everybody bought Bitcoin at 10 cents. But from 10K to 69K, beautiful relationship. It's starting to break down, but as a human being, you have such a strong attachment to this relationship. You're like, no, I'm not getting out. It's at 50K. There's no way I'm selling it. I'm just going to hold it. All right. We told you to listen, say goodbye, move on to something else. Okay. And the perfect decision when it comes to trading, it would have been, well, divorce this thing for a little while, like Ben Affleck and J-Lo, back in 18 years ago, 20 years ago, they were going to get married, but they were smart enough to understand that, look, Ben was like, J-Lo, listen, we're at 69K right here. I mean, things are about to do this. Let's just call off the wedding. Now, 20 years later, or 18 years later, they're like, well, we're back to 18K. Let's give it another shot. So they're like, well, let's get married now. So they get married this year in 2022. The point is, you get stuck to the relationships. You're so uneager to cut them, even though deep down you know they're highly risky for you. You know that you're seeing signs of things that are not something you want to see, that are likely to be a problem later. So if you don't cut the problem right here, or right here, or right here, or even right here, you could have cut the problem at 40K on Bitcoin, okay? And if you would just listen to the 13 market moves methodology, it would have saved your entire relationship with Bitcoin. Entire relationship, all right? So next time you see some signs that are just not working out for you with a girl, listen. Girls, they come and go. Damn it. You want to be the one that's going to stick by your side if you want something real, if you want a real relationship, okay? Hey, cut any relationship where it starts showing signs of this. You can always go back, all right? Don't think like, if the girl is meant for you, you can go back. There are no issues there, okay? But if you're going to keep giving a bad girl another chance, another chance, another chance, you're going to end up here. And certainly that can't be good, because here you could have triple, quadruple your money. If you're trading options, or if you're trading on Phemex with us, you guys know this drop right here would have made you millions of dollars. But if you're trying to hold on to a bad relationship, all it does, drains your account, drains your emotions. You keep trying, just nothing works. But if you would have cut it loose right here, reposition yourself. Hey, you might have met another perfect girl, meaning you might have met another perfect trade that would have made you a lot more money. You might have switched sides temporarily to short Bitcoin in order for the greater benefit. Sometimes you have to break up with a girl. Just break up with her, damn it. Let her understand the kind of good guy that you are by having her understand how her life is going to be if you're not going to be in her life. Sometimes certain women, certain girls, that's the only way they understand. You have to let them appreciate the difference. make sure she goes date some other dudes. Like, if you're solid, what do you have to worry about? Fucking nothing. Okay, let her go date some other dudes. Have you seen other dudes out there? What competition do you really have? Like, if you really care for this girl, you want to be with her, sometimes you have to break up. So, like, J-Lo and Ben Affleck, you could meet out here at $18,000 point on Bitcoin. All right, so hopefully this makes a lot of sense. If you're a trader, I mean, this should make a lot of sense to you. Sometimes you break up with the bullish trend, you divorce, okay? You do this in order to increase your Bitcoin holdings so your relationship, after all, can prosper to a whole nother level. At some point, Bitcoin will hit $100,000. The question is, are you going to burn? Are you going to break up at the point when Bitcoin is 18, 19,000, 20,000, and you're going to say, well, hell with it. I've held too long. I'm out. I'm going to lose my patience. Or if you make the perfect decision right here, you can get the best of all worlds. All right. You can save your relationship with the person you really care about. Yeah, temporarily you can have some shakeups, but overall, where you're going nowhere but higher. So very lengthy explanation, but hopefully just going to reach a couple of people that are really trying to make sense and trying to learn their emotions of what maybe has transpired in their life and how that could be applicable to trading when you're looking at your trades. Now, for those of you that are having challenges breaking up with your girl, breaking up with your wife for the benefit of having the ultimate goal of having a great relationship, take some 13 market moves courses that may help you out. Definitely schedule a 20-minute coaching call. All right, we're going to help you break up with certain trades in the market in order for you to have a successful outcome in your trading account in the next few years here. Now, the last point before I explain you the charts. The worst part of taking a loss for most traders is they don't understand and they don't have the knowledge how to measure how close they were to a huge profit. So if you study 13 market moves, if you understand the sequences, you really have to nail some of the sequences precisely to put together a 20x trade, 30x trade, at times 100 or even a 200x trade, guys. And so these numbers seem ridiculous to you, like, oh my God, what is a 100x trade? I've never, you know, the most I've made on the trade is 100. That's like taking 10,000 to $1 million, guys. That's 100x. And for those of you that trade longer term stocks or options that expire a year from now, you guys are almost never going to see a 100x trade. But when you trade weekly options, like, everything is possible. You can find opportunities like this given the right market conditions and the right setups. So, but where most of the traders fail is you could be trading, you could be up, down. You come to this point where maybe you're just down by more than what your comfort zone is. And so, and this is where the trader cuts the trade right here, just before the trade does this, okay? And it works both ways, on the call side and the short side. So, you know, most of the traders sometimes give up on the trade right before the trade becomes insanely profitable. And so since we're trading weekly options, you know, options expire on Fridays for most stocks. And of course, we have weekly expirations that expire on Monday, Wednesday, and Friday. And now on S&P 500 futures, you got options that expire daily. Incredible tool if you're trying to take a small account to the moon. But basically, when we're dealing with weekly options, well, what's a Friday? Friday expiration, they're going to expire Friday. And Friday may not be your ideal point. At times, the Fridays where you just, if the move happens on a Friday, you can make 100x on a Friday. But sometimes the move is going to stall maybe in the second half of the day on Friday. So maybe between 12 and 4, the market's just not making any big moves. Things are kind of stalling. They're going slightly high, slightly lower, just sideways basically. But it doesn't mean that on Monday when you come, some things cannot do some wild moves where they're just collapsing if you were shorting something. Or if you're waiting for something to pump higher and it just never pumps on a Friday, like you come in Monday. But somebody asked me a question, and I can't believe, I don't think that was a new trader, but I can't believe why somebody would not understand the mathematics on this, right? So, somebody asked me, well, Leo, why would you go and buy Friday options when you could be buying next week or you could be going a month out? The simple formula for you to make money in options is you have to control your costs, just like with everything. You want to make money in real estate, or you want to make money at your restaurant, or you want to make money in anything, one of the first things you want to control is your cost. You want the cost to be as low as possible in relation to what you could sell your service or product or whatever is that whatever business you may be in. So in trading, we want to sell our option for as high of an amount as possible. So, I mean, with weekly options, so our options could be worth $1. We could be selling it the same day for, in certain instances, for $10 or even $20. Well, if you go 1 month out on the same option, well, your cost goes maybe from $1 to, let's say, $12. And if the stock is going to make the same move that you expect in this one day on a Friday, if it's going to make the same move over a month, well, this option may now be worth, $24. Okay, well, it may be worth even less. It just depends on by how much it moves, right? So here you have a chance to do a 20x trade. Here you have a chance to do a 2x trade. And it all has to do with the cost. Basically, your cost is the variable here. So the size of the move in the stock, let's say a stock goes from 1,000 to 1,050. On weekly options, that could get you a 50x, depending on all the other variables. But if that stock moves by $50 over 1 month, well, that may not make you any money. As a matter of fact, that could actually lose you money because the option premium could be deflated depending exactly when that stock is going to make the move. So, guys, if you struggle with understanding why weekly options can put you 20x opposed to buying next week expiration, which could only be 2x, or monthly expiration, which could be 2x or even lose you money, you should definitely schedule a 20-minute coaching call, because your cost of option has to do everything with the amount of money you make in a trade. So that's why you look at the charts, you calculate the move, okay, and based off the type of move that you calculate on the chart, you're also trying to match it with a time frame. And sometimes that time frame is not going to be 100% perfect. We don't live in a perfect world, okay? You like a girl, you're going to walk up to her, she's going to at times say, well, no, I don't want to go out with you. You wait till Monday and you ask her the same question again, and she's going to say yes. Why? Well, guess what? It's the timing. It's the timing of the month, damn it. Okay, so don't think there's anything wrong with you. Please don't think there's nothing wrong with your strategy. Okay, you just missed it by a couple of days because it was the timing of the month for her. Don't make you a bad guy. Don't make your strategy bad. Okay, it is just a matter of timing. And so timing the market is going to be one of the most difficult concepts you will come across as a trader, besides getting your emotions in control, but just simply understanding that you could have a super perfect trade that you could miss by just a little bit. Okay, some traders give up because they don't realize how close they were. Some traders give up last week because they don't realize how close they were on a couple of trades. And you only gain that with experience. See, you'll get that experience by taking some trades where you go from 10K to $1 million, We go from 50K to a couple of million. You understand how these trades work, and you understand that, listen, these are not everyday market conditions when these sort of trades are going to happen. But when the chart points to the fact that that trade could come across at any moment, and it can happen, okay, you can't just sit there and observe. You have to take action. So right now we're in a condition in the market where it's been dropping and dropping and dropping, and you know, if you didn't get out right here when we told you to get out, you're like, oh God, it's gonna bounce, it's gonna bounce. So now every time it bounces, things drop. And so generally you would expect a guy like me who's insanely bearish on the market at the top. Now you still expect me to be bearish, but I'm like, why would I be bearish when the market is down 30% and some stocks are down like crazy? No, this is not the time to be bearish. It is certainly not the time for the market to be doing another one of these things, right? So we're at 4,800 right here. Now we're roughly at 3,900. Okay, I don't want to be a bear here. In other words, I'm not expecting another 1,000-point drop in the market this week in S&P 500. So what the market's been doing, right? It's been going here, 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 and it's going. Oh my God, Leo! Whoa, what were you talking about? No, look, we're going lower. See, you're conditioned. The market conditions in the news headlines, they are conditioning you to be a bear because you know, like every time you try to be a bull here, it failed. Every bounce we shorted worked out beautifully. That's over the course of the last 6 months. But now what I'm saying is when the market goes slightly below some key levels, which would be like, you know, 3,700, 3,650. I mean, that was the bottom. I told you about it in one of the videos in the last month. But when it looks like the market is heading lower, there's many things for you to look at, such as the volume on which that move is taking place, the divergences while that move is taking place, and the correlations in the market. So what I'm saying is, now we had situations where the market has done this. Overall, what it's doing is going sideways, okay? But oftentimes it's going to make like one last thing, which I think we already had last week, and after that, it's going to do this. Now, it doesn't mean it's going to stay up for like a while, so the pattern you could clearly see after that, it could be doing this, before it's going to make a move lower, bounce, and so this pattern can resume, and I think it will resume. I'm just saying that it's not going to do it now. So predominantly when the market keeps trying to drop and it doesn't drop, you have even worst case of scenario here. We have a lot more reasons for the market to drop, and it doesn't even touch the worst low that we've seen recently. That is not the moment for you to sit here and say, whoa, it's still going to drop. It's still going to drop. It's still going to drop. Guys, listen, the market could have already been way lower than we're at right now. And the fact that it's not happening, it is actually highly bullish. So expect to see the market in the green, at least temporarily. At least temporarily. There's a lot of move forwards that are happening in the market basically when we're gapping lower. We could go a little bit lower, and then by the end of the day, the market's trying to do this. So this is overall bullish. And as I pointed in the last video, the market has to make a move higher before it can meaningfully drop lower. So you can't be measuring the sideways trend overall as a meaningful drop. So when we're going from 3,900 points to 3,800 points, that's not meaningful. That's not a move that would equal to this move from 4,800 points to 3,900 points. So if you expect another move like this to the magnitude of 900, 1,000 point drop on S&P, what I am saying is, first, by the market definition and setup and criteria and structure, we first have to move higher before we go lower. Now, the moves are limited right now. We're not making these 200, 300 point moves as we've seen the market is able to do in not so recent history. But listen, overall, it pays to be a bull right now until the market at least goes to our level about 4,000, 4,100. So, and that could easily happen despite of how negative everything is in the market. So if you're curious to find out what are the trades that were actually taken, because you don't want to just go and just blindly buy everything. There's certain things that will substantially outperform the market in the next 2 weeks, guys. Crazy, crazy, crazy stuff. So if you're ready for some 20x trades, guys, get in control of your trading, get in control of your emotions, sign up and trade with 13 Market Moves Coach. Now, the coach will actually help you deal with emotions. When normally you'd be like, man, I don't want to take this trade. Take it, damn it. It's got nothing to do with trading yesterday, okay? The losses yesterday have nothing to do with you beating the market today, but you got to put all that stuff aside, okay? Your wins that has happened a week ago has nothing to do with you being successful again in the market today. Your experience matters, your ability to read your emotions and the charts matters, okay? But that, if you're struggling in that area, that would be the reason to sign up and trade with 13 Market Moves Coach. Now, earnings season is here, guys. For those of you who have not taken Trade Like a Rockstar course, guys, that course is specifically devoted to sharing a strategy with you and helping you understand the correlations between certain sectors of the market that are announcing earnings. So this would be a perfect time for you to get in touch with us on a call at 13 Market Moves and get Trade Like a Rockstar course. Now, the most important part, guys, is that you do something every day to advance yourself in the market, and that would be your advancing your ability to read the charts. So if you feel like, just be honest with yourself. If you're not 100% on your chart reading abilities, all right, then let's get real. It's time to get better. This little Christmas tree I've drawn here for you, Christmas is not so far out. I mean, we are in July. So it's just a matter of a few months before you're going to be buying Christmas gifts for your family. And I would certainly love for you to have an incredible Christmas, an incredible Christmas tree. I'd certainly love for you to tell your family, Leo, listen, I've taken your charts course. Now I'm getting everybody Christmas gifts this year that I was never able to afford before. I thought about getting them these sort of Christmas gifts before, but I never thought I would actually be able to do it. I've tried for years or months. Guys, if there's certain trips you've been wanting to take and recently maybe, hey, the trading just hasn't been perfect. I am telling you that it is all possible if you get your emotions in check, if you get your charts reading ability to the next level. It's all possible. Whatever your agenda is in life, it is possible for you to accomplish it here with 13 Market Moves. It does not mean it's going to be easy. It does not mean there's not going to be any losses, guys. You just got to stick with the strategy. You just got to stick with the strategy. But bottom line, you got to have one first. So schedule a call if you're new, 13marketmoves.com. If you got some advanced questions, make sure you talk to a coach. We'll get them answered for you guys. Let's roll. Get ready to have a nice Christmas. I'll catch you guys in the next video soon. Let's roll.